We'll discuss about gold long based on this classic uptrend line. And I believe that with this understanding in years to come, this will be still very applicable. Now, in today's discussion, we're going to discuss about four key points. Number one, we're going to discuss about the two rules to draw an uptrend line. And number two, we're going to discuss how to identify the primary uptrend line, or what I call the main uptrend line, which is applicable towards the years ahead. And number three, we're going to look a little bit mid-term to short-term about how to identify the secondary uptrend line. And last of all, we're going to discuss about, is it a time to look into gold to buy on dips again? Now, before we get into the topic, disclaimer, what presented here, it is not a recommendation, so please consult your licensed broker. My mission is to create lateral thinking skill for every investor and traders, knowing when to take a calculated risk with market uncertainty and the bolder risk when opportunity arises. Now, first of all, let's discuss about before we go into the primary uptrend line, let's discuss about the two rules how to draw an uptrend line. Now, number one rule is that for an uptrend line, we look out for the significant bottom or the significant trough. And we try to find at least three of them. And then we try to connect the dots of all these bottom, the significant trough. And rule number two to draw uptrend line is that among all these significant trough, we try to find the best fit. Now, as I mentioned that we will go into number two and number three to discuss about how to apply these two rules to identify the primary uptrend line and also to identify the secondary uptrend line. Now, again, what are the two rules to draw an uptrend line is that number one, we try to identify the significant trough. Then we connect the dots together, or the significant trough, and we try to find the best fit. So we have two examples here, which is point number two and number three. Now let's go to point number two, is that the primary uptrend line, which is the main uptrend line. And for that, let me just remove myself. And now for a main primary uptrend line is that we're going to squeeze in the chart as much as we could. Now, my objective is that for the main uptrend line is that we try to get hold of as much data as possible to identify when did the gold uptrend started. Now, we could see that the gold uptrend started in year 2002, about that. Okay. Now, what I'm going to do here is that when it comes to drawing uptrend line it has to be experimental. Now, what do I mean by that is this. Now, we try to draw all this trough together since about 2000. And you will realize that if I'm going to connect all these dots together, and I have a lot of missing gaps here, as you could see. Now, this may be not a good one. Now, I try to draw all these tilted the gradient a little bit. And I still find that I have a lot of missing gaps. I miss out all these points. Okay. Now, in drawing an uptrend line, the two rules are important. Number one, if you still remember, we look out for the significant trough. The significant trough. The whole idea is that we look out for a lot of fear at a point in time. Now, so I'm going to delete this. Now, this significant trough, as we could see, using our naked eyes here, is that I saw a significant trough here, a significant trough here, and maybe here. Now, let me just try to draw all these 3 points together. Okay. And we got 3 significant points. Okay. And you realize that the second point, it kind of misses it quite a little bit. Now, what is the second rule? The second rule is that we try to find the best fit. Now, the best fit is that I will have to do some adjustment here, whereby if I'm going to tilt up a little bit here, okay, and I will realize that I'm going to zoom in a little bit here, as you could see, maybe just about here, and it still works. Yeah. So this is second trough, and I realize that this is a false break. Now I'm going to expand a little bit for you to see here. It's a false break. And I'm going to squeeze in back here again. And maybe with that, I'm quite convinced that this could be a very good primary or main uptrend line. And could I just adjust a little bit further back? And this could be the 4 points, another significant bottom. Let me just expand that. And it kind of sit there nicely. Yeah, so that the market closes here. It touched at the low, the second point, the third point, it kind of rested quite nicely. And the fourth point, there was some false break. Now, I got 4 points here on a primary uptrend line or the main uptrend line. And I would say that this became a very classic uptrend line that will be applicable in years to come. And I'm going to extend this a little bit further. I'm getting excited. Yeah. Okay. Now, something about the when we use a weekly chart and when we look at such a broad horizon about from the of the gold market, it also makes sense to also tie in with some fundamental understanding here. And all this while, I think over for the last many years, I always have this mandate to buy gold on dips, whether you like it or not, because I believe that gold is or precious metal, not just gold, but precious matter is one of the inflation hedge asset. And this is what I look at for gold and how you can apply the uptrend line to work. Is this is how it works. And each time when the gold or precious metals start to head south, I always start looking at this main uptrend line to find if there's any buying opportunity. And what we're looking here is a COMEX gold futures. And I like to look at the futures because one of the reason I can also refer to is trading volume as well. Now, let's go to the second part here where we discuss about number one, the rules, the two rules to draw uptrend line. We discuss about the main uptrend line. And now we're going to go into the secondary uptrend line. And this will help us to do a bit of a midterm to short-term trading for the gold market. Now, in the same measure, I'm going to apply the point number one here, the two rules on how to draw an uptrend line. Now I'm going to expand this chart a little bit. I'm still going to use the weekly chart for the gold market. And this is what we're going to do. You still remember two rules to find the significant bottom. This is a significant bottom. This could be a significant bottom. And this one, I'm not too sure. Let's try this out. I found there's three significant bottom, and this could be one as well. Or in any case, I'm going to draw the three bottom together. And I find that the market seems to be behaving according to this uptrend line. This is what I call the secondary uptrend line. And this is what we see. Number one is that we try to find all the significant bottom. And number two is that we try to find the best fit, which is here quite nicely. This was rested well, rested exactly here. It seems like there's some false break. Now, let me just try to do one more thing here. I'm going to look at the daily chart. Now, remember, this is a weekly chart, and it seems to me that this is quite a nice secondary uptrend line. I'm just going to experiment with different time frame, and I look at the daily chart here. And I could see that on this day, and this day was the 16th of May, and it rested very nicely. And what could you see here? I could see a hammer rested well on this secondary uptrend line. And I remember I was making a delivery here on the 16th of May. We spoke about the hammer. And as time passed, the market is behaving quite well and it forms this very nicely secondary uptrend line. And even right now, if you ask me where's the gold heading, now based on the main uptrend line and the secondary uptrend line, based on the 16th of May, we saw a hammer which is reactive, very reactive, is reacting well to the secondary uptrend line. I believe gold is still trending up. Now, of course, you may not be as fortunate as those that have witnessed this um, hammer on the 16th of May, but it's still all right because if you're talking about you're taking a midterm position, I think gold at this point is still a buy. Of course, with a stop loss strategy, please do note that 16th of May, this particular low, which I believe that it should not retest it anytime soon. But if it ever retests the 16th of May low, and this is where we have to apply the stop loss strategy. And having said that, my view for the gold is still an uptrend. It's just that because we look at the this perspective from the secondary uptrend line, that's more on a short-term perspective. Continue to explore this topic with these related videos and register for these webinars as well. Follow my Facebook page for my daily market insights. To be updated with my latest video, subscribe to my channel and remember to turn on the notification bell. See you again very, very, very soon.